ourselves in, I'd like to take a step back and sort of talk about the pledges and the commitments that have played the climate regime so far. So in the Kyoto Protocol era, which is the era before the Paris Agreement came into effect, countries collectively had decided that they were going to try and cut their emissions. This is the industrialized countries had decided that they were going to try and cut their emissions by at least 18% within the Kyoto period. Cut to 2020, if I was to remove the economies in transition, which is essentially the erstwhile USSR nations, the emissions reductions were less than 4%. So this is the implementation of the pledge that was committed as far as domestic action was concerned. Another promise that was made was of 100 billion new additional climate finance that needed to be put forth by 2020. And you all know, as far as COP26 was concerned, while there was immense leadership in terms of announcements, the financing budget and the promise was postponed yet again. So we're here today with one really big good news, which is that COP26, in terms of its pledges, has finally put the world on track to being able to stay within 2 degrees Celsius of global warming. That's a massive feat, a massive political feat. But this political feat will require immense financing, technology transfers, and capacity building to make it a reality. If I'm not mistaken, we need 130 trillion in collective assets to deliver on the pledges and the net zero commitments that have been placed on the table. Where is this money going to come from? I will ask this hard question and turn to my panel to shed some light on it. First, if I can go to Mr. Kant, if you can talk to us a little bit about this climate finance gridlock that we find ourselves in, where even the definition of climate finance is yet to be agreed on. What are your thoughts on it, and what would you suggest we need to really be thinking about today?
So, Shika, let me first say that, the financial architecture of the world was designed for the post-World War II era. It's not designed for climate change. And let me also say that there are vast amounts of private pools of money which are available, which can flow in for climate change. But they will flow in if risks are mitigated. And for risk mitigation, the financial architecture will have to be altered. And that is multilateral developmental agencies which were designed for the post-World War II have to step in and provide large source of fundings, not through direct lending, which they continue to do, but through first loss guarantees, through credit enhancement, through blended finance, etc. And therefore, this multilateral development agencies, their equity needs to be raised by G7 countries. They need to re-alter their role as funders for first loss guarantees, for credit enhancement, etc. And they have to play a very critical role. Once that happens, then you will see private pools of money flowing in very large scale. Secondly, let me tell you that you talked about technology transfer. Private sector will play a key role. To my mind, for instance, in India, we are not responsible for this vast amount of carbon space which the developed world has occupied. It's occupied almost 86% of the carbon space of the world. It's left just about 14% for the developing world. And it's responsible for about 80% of the emission in the world. So climate justice demands that the developed world supports the transition of the developing world. And the principle of climate justice has been very well accepted. It supports the transition of the developing world. If the developing world is convinced that it needs to have a growth which is green, which is resilient, which is inclusive. But it will not be possible till concessional finance, because you have to do technology leapfrogging. You have to get into the generation of next era of technology for not merely solar, but you have to decarbonize hard to abate sectors like refinery, like steel, like long distance transportation, like fertilizer. And this would require massive amount of new technology. But the private sector will go and get it. You don't need technology transfer. Government to government, if you get technology transfer, it will be third-class technology. The private sector will go and get it. But the private sector needs concessional finance, low rates of interest to make that technological leapfrogging. India's private sector is truly brilliant. It's top class. It's demonstrated that it can do 110 gigawatt of renewable energy. India was the only country which met its NDC commitments. No other G20 country met its NDC commitment. The private sector India will achieve it. We've created the policy regime for them to do it, but you need long-term concessional finance for which the multilateral funding agencies will have to play a key role, and then private pool of monies will flow in a big way.
I can push you for just one more minute on that. As the lead of, by any accounts, the most important think tank in the country today, how do you see the conversation on the politics of the multilateral financing entities within either the space of the UNFCCC or the G20 or the G7 actually playing out so as to make this money available?
Yeah. So firstly, we in India see this not as a challenge, we see this as a huge opportunity. Number two, we clearly see that from COP1 to COP26, the developed world has not lived up to its commitment. It talks about long-term goals, it talks about 2050, but does not achieve short-term goals. The action is now. You don't require action for 2050, you require action now. And the developed world does not live up to its commitment. So even the COP26, a vast amount of commitments that it made in COP21, it did not live up to it. And our concern is that the COP26 commitments that it has made in terms of finances, it will not live up to it. And therefore, the developed world needs to play a far more positive, a far more constructive role to enable the world to transition to a green world of tomorrow.
Thank you. If I can actually turn to you, Ms. Abu now, to talk to us a little bit about that risk perception that Mr. Kant alluded to. Because very often in these conversations, the next aspect to be tabled would be the ecosystem, right, within which the money needs to flow and how that's not conducive enough for such investments. Can you talk to us a little bit about the risk assessments that are currently underway and how they can actually support this transformative finance to flow where it's most needed?
Thank you. I would like to just start by saying, EcoBank is based in 33 African countries. And in 2011, we actually developed our sustainable framework of how we are going to participate in the UN's SDG goals. And that made us include the risk assessment into all we do as far as supporting this agenda. And when we look at the risk assessment, which is now embedded in our credit policy, we look at what kinds of activities are on the exclusion list. Because if you're participating, you should try not to finance what is in the exclusion list. The second thing is you start looking at how the activities do impact the ecosystem. So you have to have a framework, like a checklist to say what are they doing, how are they doing it, and what is the impact it's having on the environment around them. We also try to support in terms of education, because sometimes the enterprises that you have in front of you might not be aware or might not be at the same level or have the same access to information. So we also play the part to be able to inform and educate so that you can support them in turning the activities or diverting the activities to be more in line with what the goals are. So for us, we actually make sure that we participate, we go and check, and we educate and support them to be able to move their business in that direction. So it is part of our credit structure. It's embedded now in what we do, just to ensure that we direct the flows. The second thing is we also have to participate in this social responsible finance. We can't just talk about it, but we actually have to participate ourselves. So we have the banking support to women, for example, where we have created a program called Elevate to be able to provide financing to women and help them grow their businesses. We also have support that we give in terms of digital or microloans to those players that are at the beginning stage of their businesses. And EcoBank, we equally created microfinances, because to be able to finance some of the startups that are really participating in the green economy, or some of the entrepreneurs that are just starting off, we had to create a microfinance that could cater, that could structure loans that can meet the request of these small and growing businesses. So I will stop right there for now.
Can I probe a bit deeper and get a sense of, while you're moving towards sort of clean technologies and clean businesses and social enterprises, are there rules within the banking financial system in your own country or in any of these other 33 countries that you're in that systematically pose barriers to what it is that you're trying to do?
Definitely. I believe that the society I would speak to Central Africa, where I'm more familiar. First of all, this is new. When you talk about green economy, it's still very new in most of our economies. And therefore, the banking sector, the financial sector, is not fully ready. We are used to giving loans to businesses or enterprises that are historic, that we know. So trying to give loans in this new world, it's a bit complicated. We have the first barrier, which is normally policy. The policy frameworks that the regulators have for the financial sector is already a stopping block, I would say. It inhibits the type of financing that you can give and under what conditions. So the regulators also have to try to move to be in line with the new green economy. The second thing is culture. People don't talk about it a lot, but culture is a big barrier, because people don't understand what it is, what it's all about. It sounds very fancy, and to try to get people to accept even or participate in it is a problem. So a lot of education has to be done there. Thirdly, in our economies, we don't have long-term money. We don't have venture capitalists. We don't have people who have that risk appetite to want to invest or have their flows put into that type of business. Because as you know, there's nothing, it's not physics or anything when it comes to banking. It's depositors' money that you have taken that you're going to use to invest in these businesses. So if the culture or the environment doesn't understand what is green financing or what is a green economy, to tell them you're going to take their funds to put into something they don't understand is also a barrier to what we are trying to do. So I believe that there's still a lot of room to grow, but institutions like ours that have the economic development of the economies in which we operate as the forefront of our vision and our mission have to take the lead. That is why partnerships are important. Partnerships are important to work with organizations like the UN, to work with organizations like UNIFA that already are ahead and understand what it's all about. So where we cannot go or where our regulation or policy stops us, through the partnerships, we'll still be able to participate. And we have to show that from our operations as well. Our operations should be in line with that development towards green financing, because if your operation as an institution is not adapted and people don't see the change, it will be difficult for you to be preaching something that you don't practice yourself. So there are many elements that are hindering, as I've mentioned, but I think that key players in this ecosystem like financial institutions, have to take the lead to help people gain that comfort and to help people understand why it is necessary for our economies to be sustainable and to be scalable also. Because, as you know, a lot of startups, a lot of entrepreneurs are coming out of this green economy. And for economies like ours, that job creation is a problem. We have a very young population in all of Central Africa, but we have a problem with the jobs that we can give them. So if they understand the value of financing and developing the green economy in the sense of job creation for the future generation, I think there will be more adherence. So there are hindrances, but I think institutions like ours have to be at the forefront to be able to push the agenda further.
Thank you. I'll come back to you on some of the partnerships that you've spoken about in a bit. If I can move to you, Mr. Kim. We understand that, the policy environment makes a lot of difference to the flow of investments, but sometimes a lot of the policies are in place. You have long-term targets, you have technology coming to you at a fairly good price, and yet the cost of capital holds investments back. And there's a lot of risk perceived that allows the cost of capital to be that high in countries like India and most of Africa. In India alone, your solar cells, 80% of the price that we pay is a result of the cost of capital. And that's a huge risk perception cost that investors are having to bear. And if this is the case for India, I can only imagine what that percentage must be for a country like Vietnam or parts of Africa. So I guess my question to you is much in line with what I asked Ms. Abunau, that do risk assessments, or how can risk assessments actually encourage the flow of investments where they're most needed?
Thank you. Thank you very much for the question. I mean, risk, in terms of risks of fossil fuels, it's pretty evident that fossil fuel-based assets are risky. One example that I'm experiencing in my home country is our national utility, which is about $10 billion in market value, raised $8 billion of debt in the first 3 months this year. And this is mainly because of post-COVID fossil fuel volatility and Ukraine crisis. And this is a very good example of the risk of fossil fuels. Therefore, as you mentioned, I mean, proper risk assessment, especially about the financial risks of fossil fuels, should be made. However, another point that I would like to mention is that unless the world intends to self-destruct, it will have to. I mean, many of the investments that are being made outside of the 1.5 degree Celsius scenario is going to be a risk. And this is basically how risk assessments should promote green investments. Risk assessment should determine whether investment is inside or outside that trajectory. And although, unfortunately, the speed is not as what we want, we are seeing changes. I mean, the sentiment of fossil fuel, especially coal power, has dramatically changed from where I come from. However, at the same time, I understand that risk has to be assessed, but a lot of the risks that our public finance institutions are telling us is a risk, and export credit agencies are telling us is a risk, is that it's the environment. I mean, it's not just about the currency risks or the political risks of emerging economies that make it difficult to make investment. It's also the regulatory environments in the countries. I mean, I hear this a lot, especially from our government banks in relation to investments in Southeast Asia. They say that it's tempting to go into fossil fuel assets investments there because the pricing schemes, the regulatory structure is also good for that. Whereas renewables, subject to all kinds of grid constraints, all kinds of land restrictions, very difficult to go in, a lot of risks, aggregating, I mean, resulting in the 80% of the capital cost you just mentioned. So that's what I hear from our government banks. So there has to be also an emerging economy side kind of transition that has to take place along with the financing coming in from the more developed nations.
If I can just push you on that a bit, right? The transition finance that you mentioned, can you talk to us a little bit more about your experience in, has it been easy? Is it far more accessible if it's couched as transition finance and not necessarily money going in towards clean energy projects?
Money going into?
Clean energy projects, for instance. So transition finance to move away from fossil fuels.
Well, I must say that there was a time our banks were very, very interested in, let's say, coal power projects, and the problem there was Korea, Japan, and Chinese banks financing of coal power projects was sort of a global problem, which was addressed a lot by the global community. Our banks have moved away from that and are now more looking into opportunities to transition. The thing is that they are a little bit unaware of what kind of transition they can make. They're lingering around all kinds of things, but they are very, very much interested in going to the opportunities, because for the banks, they're losing opportunities in fossil fuel investments, and they have to fill that gap with something, and a lot of times that should be transition finance. The two things that I think the transition finance that you're asking about should address is number one, if you want to accelerate the retirement of certain fossil fuel assets in a certain country, there is incumbent interest. I mean, in India, I understand that 80% of your power assets have a long-term PPA for investments. Those have to be addressed. Number two, the money going into if you retire a certain asset in a certain country, in emerging economies especially, there will be a void in the power system of that country, and thinking about how to fill that power system up with green assets, renewable assets, is going to be a difficulty. And in the middle, I mean, there has to be a private concession. I mean, there has to be like an adjustment in the private arrangement, and then some money diverted that should have been happening for 10 more years being diverted into a clean asset. And that's where I think the government or multilateral bank-led transition financing should come.
Great, thank you. I'll come back to this in a little bit. If I can move to you, Mr. Thompson, lots of conversation. I'm sure right now you're very glad that you're from Denmark and not any of the other Annex 1 countries. Lot of conversation on promises not met. But in your capacity from the European Investment Bank, what would you say is really holding big financing players back in being able to build that capacity to actually deploy and scale the money where it's needed the most?
Thank you, Shita, and that's a quite good question. Let me just say two words about the European Investment Bank, the EIB. That it's a EU bank, it's a EU climate bank. We finance projects for annually around 60 billion euros, mostly in EU, but also almost 10 billion annually outside EU and in developing countries. We've committed ourselves to that half of our financing should go to projects that actually reduce emissions or work in terms of climate adaptation, and to make sure that the projects that we finance within this definition are actually green. We adhere or make sure that all the projects that we finance are aligned with the EU green taxonomy. And definitely multinational development banks like as EIB is one of them, has a very important role in the provision of the financing that the rich countries have committed in terms of climate finance to emerging economies. I think that the multinational development banks together provided almost 40 billion of the 80 billion euros that rich countries provided in 2020, which was too low, which was of the 80 billion, which was too low, but is now rising. And I think the multinational development banks will have to ramp up their capacity to actually handle this challenge. There are two entrances to this. One is, has also been mentioned here, is sort of the capacity to take upon risks, or the capacity to actually deploy capital to in financial terms, more risky projects. I'll come back to it. But then also the capacity to deploy people, to have the people with the skills and financial and technical skills to actually engage in partnerships with host countries in these kind of projects. On this, on the risk capacity, the EIB, we collaborate or are supported by the EU, where the EU will sort of provide us with guarantees for some of the activities that we are doing, and some of the other multinational development banks have the same opportunities. And I think this kind of activity has to increase because it strengthens our ability to carry out operations and projects. Maybe you heard the President of the European Commission, Ms. von der Leyen, giving a speech yesterday here at the conference, where she also talked about the Global Gateway. It's a EU program to finance transition in Asia, among other areas. Then, in terms of risk, I think it's very important also to say that there are some project risks. Coming from a bank, we talk about bankable projects, and when you talk about take a renewable energy power generation, if you're financing a wind turbine park with a 25-year loan, you have to be certain that the revenues they are also there in 20 years' time. If the loan is 25 years, you would have to know, okay, will the revenue still come in after 20 years? And therefore, as also Mr. Kim just mentioned, that the regulatory framework is extremely important, maybe particularly for renewable energy, because it has these special characteristics that sometimes you produce much, sometimes you don't produce so much. And maybe then also on specific projects, I think let me also mention in terms of this, on the specific projects, that it's important with good projects, and good projects that fit into a plan within the countries, because otherwise the uncertainty could be too high looking forward. In the EIB, we have set up, and as we call it, a new branch, EIB Global, which intends to put more people on the ground to partner with host countries to actually also to plan on the upstream planning of the energy planning within the countries. So I think on these 3 points, if we can move forward on those, I think the multinational development banks would be able to provide a stronger role also to unlock private investments.
If I can push you for a bit on that. Mr. Kant started with talking about how the financial architecture needs to be reformed, right, to take into account climate change. And a lot of what you have said, right, bankable projects, we've been hearing this term. I mean, I've been working in this sector for about 10 years, and I've heard the lack of bankable projects being cited as a reason for the lack of climate finance since then. So if you can actually talk to us a little bit about the types of reforms that are actually required in the financing architecture, but also give us a few examples of the kind of innovation that's required in financing instruments to ensure that these bankable projects are tabled at scale.
Thank you, Shika. And let me start with making 2 observations. First is that the climate challenge cannot be solved with public money alone. Private investors, private capital has to be included at scale and has to be mobilized. The other thing is that the public effort is needed to unlock private capital in this scale. So the question is, how do we best use public resources to maximize private investments, incentivize private investments into climate, and so to leverage, to increase the investments. And I think the basic issue here is to, as also my fellow speakers have mentioned, to analyze and understand the risks, the financial risks embedded in specific projects. Again, as I mentioned before, these are often projects where the loan financing will have very long tenures, and you have to have some kind of certainty about how the money are to be repaid. There's the project risk I mentioned. Does it work? There's a political risk. Will the regulatory framework change? And there's also, for many of, for renewable energy projects, there's a market risk. At what price will the electricity, for example, be? Can that be sold? The experience in the European Investment Bank is that we need public backing or public. The public has to guarantee or to take some of these risks. It cannot be transferred to the private sector. It will be too expensive for the private sector to take some of these risks. So both we need some guarantees in the EIB. We get some guarantees from the EU on this, but in many cases it's also absolutely necessary with the grants to reduce the capital expenditure of the projects to make them sort of more bankable. Also, we see that and I think that is also so for the other multinational development banks, but we put in, when we evaluate a project, we do it very thoroughly, both in financial and in technical terms. Often private investors will not have the resources to do that, but so this due diligence, let me call it that, will often be sort of a stamp of approval, which will also help to unlock private or to harness private investments and get that into projects also. Let me just mention also in terms of financial instruments that we invest in a number of green funds that provide equity into climate investments. And again, that is about risk. With the equity is sort of the highest absorption risk kind of capital, which is also relevant to unlock private capital investments on top of that. And lastly, let me mention our green bonds. We are one of the largest green bonds issuers in the world, and this is a way for private investors like pension funds to actually, when they buy our bonds, they can invest in green investments in EU, but also outside EU. Again, here it's very important for our investors that we follow the green taxonomy that I mentioned before. Thank you. Thank you very much.
Thank you. Thank you for that. I'll come back to you on the public versus private, so the sense of grants and equity in a few minutes, because you alluded to how a lot of it is going as equity into projects that are in fact bankable. If I can turn to you again now, Mr. Kim, to talk to us a little bit about the sort of financing innovation that you have seen come forth and has supported the unlocking of this concessional finance that's actually required to move in economies where the risk perception has been high.
So are you asking about how difficult it was to transition, to make the mindsets of our banks changed?
Yes.
Okay. As I mentioned before, whether or not East Asian governments should continue to finance coal projects, especially in Southeast Asia, but also in South Asia, has been a big global problem, and our government banks have been involved in this. And what eventually happened was the three East Asian nations, Korea, Japan, and China, decided to no longer finance coal power projects abroad in a matter of 6 months. Xi Jinping, our president, and the Japanese prime minister all said pretty similar things in international events in a very short time. And this wasn't the first synchronization of East Asian climate commitments. The net zero, 2050, 2060 net zero announcements also took place in about a month period. So kind of showing the international politics, regional politics dynamics of of climate, I mean, in the region. Going back to your question, the most important obstacle our banks faced when they were deciding not to finance overseas coal projects was basically a just transition problem. We don't have mining in our country, so mining is not a big problem. I understand mining is a problem maybe in India, but we have a very vibrant coal power plant equipment manufacturing industry, which many workers are reliant on. A big part of our economy is reliant on, and our government had to make a decision on whether we will basically. I mean, and these companies are very reliant on government-backed, I would say, concessional export credits and things like that. And our government had to make a decision whether this is going to be a part of our economy in the future. And due to the global pressure and a growing youth climate voice, air pollution, all kinds of things combined, we decided to move away. The bigger challenge the coal power challenge is relatively smaller, I would say. The bigger challenge that we will face is going to be in oil and gas. Because in terms of numbers of financing, if we finance $1 billion, if we financed about $1 billion in terms of export credits and loans per year overseas, in coal power, $1 billion, we, in the oil and gas sector, we finance about $13 billion, and about half of that is support for our shipyards. And South Korea is the world's largest shipbuilder. We produce about 80% of the world's crude carriers, 70% of the LNG carriers in the world, kind of like becoming the global maritime pipeline of oil and gas. And it's about 2% of our economy, a big workforce there around our shipyards. And oil and gas business, just like what probably one of the implications of the Ukraine crisis is that, okay, there's going to be a limited future of oil and gas, and that also means to our shipyards there's going to be a limited number of LNG carriers or oil carriers that are going to be commissioned. And for a government, in addition to thinking about whether our government will continue to support financially these shipyards building oil and gas carriers, they have to think about how to soft land the economy. It's a big economy. How to soft land the economy, how to soft land the region where our shipyards are located in the future. So a very big just transition question was left when our government decided to limit financing of coal power plants in the future in the oil and gas sector.
Thank you. So we've heard of risk guarantees, we've got export credits. Ms. Abunau, if I can turn to you to hear about some of the partnerships that you had alluded to in your initial intervention and innovations in financing instruments that our audience can maybe take back with them.
Thank you. I will start with the initiatives that we have done to ensure that we participate in the green transition. The first one being the sustainable notes that we raised in 2021. We were able to raise $350 million on the London Stock Exchange, which the proceeds we hope to be able to finance or refinance new or existing assets. Equally, in our headquarters, we have the solar plant where we use the excess power that is generated to supplement security agencies in Lomé, Togo. We are also trying to scale up financial inclusion because for us to transition properly, that means that we should be improving the human well-being and also reducing inequalities. So there we're able to leverage on our digital platforms to improve or to aid financial inclusion, as well as partnerships with agencies to be able to get into the underbanked or unbanked population. And as I mentioned before, apart from the microfinance that we have, we are also partnering with different agencies to be able to provide microloans and savings to improve or support financial inclusion. We also work a lot with different UN agencies in the projects that we do in our various countries, particularly in Ghana, in Kenya, in Rwanda, in the spaces of, in Cameroon as well, in the spaces of diversity and inclusion and financing to entrepreneurs and startups that are in this green economy space. We equally try to link up companies that we have, that we see development in, with UN agencies that can help them in all what is carbon notes or carbon grading, for them to be able to also leverage on what they're doing, and trying to link them up with agencies. If you take, for example, the waste collection company in Cameroon that has a lot of waste and has been handling it in the old-fashioned manner, if I can use the term, and we're able to link it up with an agency to help them to reduce the carbon emissions and the pollutions that they were doing, and to be able to get carbon credits. So those are some of the initiatives that EcoBank as a group has taken to really participate in the green transition that we're trying to all work towards.
Thank you. Very interesting and also extremely encouraging to hear this microfinance story scale up to a continental level. Mr. Kant, if I can turn to you. Regulatory roadblocks, solving for risk perceptions, these are almost always the response in any conversation around climate finance. And with COP26, Prime Minister Modi's 2070 net zero target, that's a tall order for us, which will require at least 10 trillion in investments moving forward. At the same time, we need to start thinking about the just transition story that will have to play out as far as our coal sector is concerned. To give you a stat, I think we're going to require upwards of $32 billion to decommission just 45% of our power plants today. So in terms of the policy coordination, the push and pull, right, of the transition finance, the just transition story, the job story, the growth story, the manufacturing story, how do you see regulators balancing these priorities, and then what would you sort of like us to focus on?
So let's get the story right in practical terms, what it implies. First is that India's pushed for 110 gigawatts. We've already achieved 110 gigawatt of renewable power. We were the only country to do this. We brought down the cost of power, renewable power, to 2.7 cents per kilowatt hour. The challenge is that electricity is only 18% of your energy. In India, 82% is hard to abate sectors like refinery, fertilizer, steel, etc. So you have to decarbonize hard to abate sectors. We import about 160 billion worth of fossil fuel, which will go up sharply in the next decade to 300 billion. The answer, the Prime Minister has already said that by 2047, when India becomes 100 years independent, we will be free from fossil fuel. Now, the strategy for India is that use your renewable to crack water, produce green hydrogen, and then use green hydrogen in all the hard-to-abate sectors. Green hydrogen today is about $3.5 per kg. Bring it down to $2 per kg by 2025, bring it down to $1 per kg by 2030. Now this would mean in green hydrogen, 70% is the cost of renewable, 10% is the cost of electrolyzer, 20% is balance of plant. This means that you have to bring down the cost of renewable to about 1 cent per kilowatt hour. We've done the analysis and we find that it's 1 cent per kilowatt hour is absolutely possible. It's very much possible. Is the rate of interest which is very high. And the rate of interest has to come down from about 9 to 10% to 1.5 to 2%. Now that transition needs to be supported. And that's the commitment which the developed world has given and has to live up to it. If that commitment is done through both risk mitigation by for public projects by multilateral agencies, then you will allow private sector pools of monies to flow in. There's no shortage of private sector money. The world is flushed with private sector money. But for private sector money to flow in, multilateral agencies have to play a very key role. They have to reconfigure their role, which is the architecture for World Bank, IMF has to be reconfigured, which has not happened post-World War II, and which is the real job of the G7 countries. And once that role is done, they will start playing the role of first loss guarantees in a very big way, of credit enhancement. And once that happens, then you will see a whole lot of blended finance flowing in. And that is really the key to the climate change. That is really the key to climate transformation. This is a huge opportunity, but developed world has to play a major role.
Can I turn to you, Mr. Thompson, to actually respond to that?
Thank you, Shika. The commitments by the rich countries on climate finance was not reached in 2020 as committed and as promised. But I actually also believe from figures made up from OECD that the target will be achieved and also be above that in 2023. When we look at the years ahead, I think we also have to take into consideration that many, at least seen from an EU perspective, many member states' public budgets will be quite strained in the aftermath of the pandemic and also now spill over from the Ukraine war. There will be a strong competition for public money. But at the same time, I believe there's still a very, very strong commitment to climate change and to the net zero policies. So I believe this commitment will persist and also go further. But I think to go further, and now I'm on a more personal opinion, I think it's important to be able to demonstrate to the European public the gains, the very large gains in terms of climate or carbon emission reductions that can actually be gained in many countries in emerging markets. Because I think it's a fact that the amount of carbon emission reductions in projects in emerging market economies per euro will often be much higher than inside EU. At the same time, EU countries have also set up targets for their own countries, so there's a little bit of competition here. But I think to demonstrate how much carbon reductions can actually be achieved in projects will be very good. And I would recommend also to start using some kind of classification system. I mentioned before the EU classification system, the green taxonomy, so to make investors, to convince investors that it is actually green. Back 10, 15 years ago, there were some bad histories in Europe about things which were actually not very green. But I believe that. And then I think also, and I would make the point that the Ukraine war can have an effect on this. In the short term, I think many countries, short of the traditional fuels, will use whatever they have at hand. But in the medium and longer term, I think at least seen from a European perspective, the target of net zero and the target of becoming independent on Russian fossil fuels will go hand in hand, and that can actually also contribute to the rich countries' commitments to climate change also in emerging markets. Thank you.
Yeah, I think the carbon potential, but also the return on investments, right? These are all emerging economies. And would you, I think if I can, Ms. Abunau, if you would like to come in and actually talk about the actual, the thriving nature of the economies where the money is just not flowing.
Exactly. As you were talking, I think the last two speakers, what was going through my mind was, when we talk about bashful banks, why are we bashful? We are bashful because the return on investment, your return on capital is very low, when you participate in the green transition, and there's no short-term gain. So it makes everybody hesitant because by our nature as financial institutions, we are looking at return. We are bashful because the learning curve also is very slow. These are new things that we are all trying to get our head around. And I always try to remember what is the definition of this green economy, just so that you continue to put yourself in context in what you're doing. Also, we are bashful because the financial sector is very traditional. We are a conservative group of people, and we are risk adverse to things that we don't understand and that we cannot find a mitigant to what is the risk that we are seeing. Some of the things around the green transition are not tangible. We cannot touch and feel it. So as a banker, when you cannot touch and feel and explain, you become very bashful. And I think because there's the change of culture that we don't take into consideration in this discussion, we have to all change culture, and we all know that to change culture is something that is very, very difficult to do, and it takes time. But my question is, or what I think we should try to leverage more on, is what is our response? What is our response to this as banks? What is our response to this as financial institutions? We have to be bold. We have to be bold, because while waiting for our depositors to change their mindset about what the bank can use their deposits for, we have to set up corporate social responsibility frameworks so that our investors can put the money that we need to be able to begin the transition while waiting for the culture or the understanding to follow. I think there's also that need for this multilateral cooperation. That's why, for me, participating and hearing what my colleagues are saying about what India is doing, or what is already happening in Denmark, or what is happening in Japan, helps me to also take back that knowledge to try to implement. So multilateral cooperation is key, because there has to be knowledge sharing. We might not know the answers, but if somebody is already ahead of us, we should be able to take from that to take to our own areas and grow. We also have to encourage and incentivize startups and entrepreneurs so that they will bring the innovation. They would push the economy, as I mentioned earlier, in the job creation and the service provision that they'll be able to do, so people can see value and people can see that, oh, if we support this, it will be scalable. And then we have to continue to develop partnerships, as I mentioned before, partnerships with agencies, partnerships with organizations, partnerships with foundations that are already ahead and that have the capacity and the skill to lend the support that other institutions might need to be able to push the agenda forward. So for me, there is a long way to go in terms of this transition, but I believe if we put all of these elements together and continue discussions like what we are having now, we will be able to grow at the pace that is needed for us to actually meet the goals in 2030.
So I'd like to pose my next question to all of my panelists, actually, because green taxonomy, this is something that's, sort of happening at a level where sensitization, so green taxonomy, that conversation is taking place at one level, sensitization for climate or eco-friendly projects are happening at another level, cultural change is taking place at another level, and the cost of capital is being drawn at a completely different level, right? So when you have challenges at multiple levels of governance, what would you say are some of the things that we need to start thinking about at a national level, and then say at the level of a G20, which India is going to take the presidency on in October, to get the conversation to meet somewhere such that the cost of capital actually becomes a bit lower? Who would like to start? Sure.
Thank you, Shika. I believe we see a very, and Mr. Kant also mentioned it before, we see a very huge demand for investors to participate in green investments. And of course, there's the question we mentioned before about risks, but I think one of the other main questions that we meet is that what is it actually we are financing? Is it actually green? How do we avoid greenwashing? And because like pension funds, they want to be able to assure the pensioners that it is actually green, and they hate being caught up in something which is not. And in this respect, it's very important that we have a language or a measurement to find out, okay, what is actually green? I think the EU taxonomy is a good question to that. Other countries, other regions could develop something differently, but I think there should be some kind of common content of this understanding. So to be sure, is it actually green? That would be quite an important condition for private investors, particularly private investors buying bonds, that you can actually assure them what you're doing is what you are saying you're doing. So.
Mr. Kant, would you like to talk to us a little bit about the role of standards and how they actually are posing a challenge or an opportunity for a country like India?
No, all these, whether it's taxonomy or whether it's standards, my view was that these are all opportunities, because the whole world, as far as new technologies is concerned, is at the same level of growth. And it's for countries which push for climate change, adaptation and mitigation are the ones which will benefit in the long run, because valuation and capital will be attracted by companies and countries which go digital and which go green. So these are all opportunities for all of us, and the earlier we finalize taxonomy, the earlier we finalize the standards, the better it is.
I believe that, first of all, we should try to develop the South-South cooperation. When you think of what is in the Indo-Pacific and Africa, we should try to develop that partnership and synergy instead of Africa always focusing on their traditional colonies, I will call it bilateral agreements. There's a lot of potential that can be generated between the South-South cooperation, because we are, in our sense, I would say for us in Central Africa, we're still developing, but there are already emerging economies that could benefit from what we have to provide or what we can export, as well as import from them. And also the knowledge sharing between those parties is more comparable than if we continue with the Africa looking out to its previous or historical colonial partners. At a national level, and if I take the case of Cameroon, you look at issues like we have huge vegetation, huge forests, but traditionally we have been used to exporting our wood, simply to get gain. So we just export the timber, and nothing is refined or produced or manufactured locally. This can change if we, change the partners that we cooperate with. If you look at Cameroon again, we have huge hydroelectric potential, but they are almost undeveloped. It's in recent years that we have been trying to generate this hydro energy to be able to service, the population and our neighboring countries, because Cameroon has outlets to all of the Central African countries from the north, south, east. We are the main country for all of those, most of them landlocked countries that depend on us. So imagine if we were to develop our hydroelectric capacity to be able to supply our neighboring countries, the impact it would have in terms of developing the economy. If you look at us also in Central Africa, we are very dependent on the oil sector. Our livelihood was from oil. But if I just take Cameroon and some of the other countries like Gabon, we recently realized that we have huge gas potential that have not been developed. So imagine if we were to invest in these gas resources that we have, what it would mean to the economies around us, and how we can then also change the export partners that we work on. So I think that there's a lot that can be done, as you mentioned, at national level, and developing this South-South cooperation that will help all of us in the green transition, because we'll all be able to have scalability in what we are able to do. We're able to develop our economies with the new potentials. And as my colleague on my right said, just the potential, if we look at it on the opportunities and the potential basis, I think it would be a driver and a push for everybody to be able to really participate in this green transition.
Mr. Thompson wants to speak. Yeah, and then.
Thank you, and also thank you to Ms. Appner of raising this topic or issue of South-South cooperation, which we in the EIB strongly support. And maybe I could just mention 2-3 initiatives where the EIB is involved in this in relation to India, because India has at least twice sort of introduced new South-South cooperations within this area we're talking about today, the International Solar Alliance launched by Prime Minister Modi, and also the CDRI, the Coalition for Disaster Resilient Infrastructure, which are very, very good examples of South-South cooperation, and we support that. And outside climate, also the together with the Serum Institute of India, we finance developing of vaccines for Africa. So we will strongly support this idea.
So your question is about how important standards would be, like how we're going to, I would say, globalize the taxonomy discussion. I think, well, my answer to that is that the world is not perfect. It's even difficult to set rules in a small organization, and it does take time. I think one of the things that the world kind of agreed upon recently is that we have to be net zero by a certain year to be 1.5 compliant, and it took a long time for that to be. One of the accomplishments at Glasgow was that, well, the world has agreed that coal power has no future. That's one of the things that the world agreed, and it took a long time. So yes, the taxonomies are beginning in all kinds of countries. It will take time for those to kind of synchronize and become one, but I think that's the overall learning process.
All right, I'm going to be a little bit more provocative and push back on that, because the 100 billion that was committed for 2020 annually, OECD says there's been 78 billion. India says that less than 3 billion has actually been new and additional financing, right? So that's exactly why the definition or having some sort of commonality is important. And another point within that, and I'd like to hear especially from our colleagues from South Korea and Cameroon, as well as the banker amongst us, how do we increase the share of grants that are being given out, right? Because that's really the money that's going to allow for a whole lot of other de-risking to take place. And from what we know, only 20% of the money that's being dispersed is actually in the form of grants. 80% is what some are calling climate debt, what banks are calling equity. So if I can turn to you to give me a response on this, that would be great. And after that, I'm going to open it up to our audience for questions. So I hope you're enjoying lunch, but that you're also thinking of things that you may want to pose to this panel.
Well, you're definitely pushing, so I will have to stretch myself. Definitely the area of grants is something that you have rightly mentioned. It's not fully developed because what grants are given when somebody understands or when an institution understands how whatever the project is going to be is actually going to have impact. And because it is new, like I mentioned, it's something that is not yet understood fully. I think that is why we have this low amount of grants being given. So what can we do, I think is a question you're asking, to push more grants than to be focusing on financing. Is for us as an institution to be able to help the companies package their sell better. Because if you have to be able to get a grant, you have to be able to package your idea or package what you're doing in a manner that will attract. And I believe that some of the companies that we're dealing with might not have the exposure or the expertise. So I think what we are doing, I would take the case of the Elevate program that we have for women at EcoBank, is because we realized that we had a lot of women entrepreneurs. If you look at Cameroon or most of Africa, women are at the center of most of the small businesses. But the issue is that most of them are not properly structured or packaged to be able to warrant a grant. I would take the case of a grant we got for a women's group in Kribi in Cameroon that were smoking fish. It's a very big business in Cameroon because it is one of the big consumption products in the country. But they were doing it, first of all, in a way that was not environmentally friendly and was also very harmful to their health. A lot of them had a lot of health issues that were linked to constantly being in the smoke of most of the time to be able to smoke the fish. So we got a grant for them to upscale the technique that they were using to reduce the pollution to the environment, but also to reduce the harm that it was causing to them as individuals. And this was because we're able to step in, understand their business, and structure it for them in a way that was sellable, and thus gain the possibility of getting a grant. So I would say that the biggest thing that has to be done is to be able to look at the startups, look at the entrepreneurs that we have in whatever sector, and be able to help them package or put the framework that they will need to be able to get the grant, and then be the partner or the middle person between them, because they don't have access to most of the institutions. They don't have the platform to be able to communicate or reach the organizations that can give them the grant. So we also have to be that bridge to be there to be able to connect those who need the grants to those who are able to provide the grants by using our platform and using our brand to be able to do so.
Very interesting. Mr. Thompson, would you like to go next?
I think that just a short note of this. I agree that sort of being able to actually sell your project or sell to demonstrate that you plan to do what the grant provider sort of is also looking for. That is very important. I would and sort of on a higher level, I think it's extremely important to that the national plans for decarbonizing are convincing, because that will be a key to unlock more grants, I believe. That would be my suggestion. Thank you.
Very humble suggestion. Would you like to go next, Mr. Kim?
No, I really don't have much to add to this one,
Okay.
but I really agree with Dr. Khan's point that whatever it's a grant or a loan, it has to open the potential of private finance. That's where a lot of the money will come from.
Well, I'm not a great believer in grants. Free money is no good. Grants should be put out as a part of blended finance, which will make creative financing possible, and that will lead to good results in the long run. So basically, all grants should be pooled in for good blended finance to flow in at concessional rates. And only then will you see private sector results coming out over a long period. Concessional finance needs to be made available.
Right. All right, I'm going to open this up for questions from the audience if we have any. Yes, sir, there's a mic right behind you.
Hello, Herbert Dieter from the German Institute for International Affairs. I have a question for Mrs. Abhinav. 2022 certainly is an exciting year. It is also a year of interest rate shocks. My question to you as a banker would be, does that threaten some of your projects? Is that a major concern? The second question I have is for Mr. Thompson. In June last year, a company called Anglo Americans had a spin-off of its coal business. And everybody thought, well, this is old-fashioned stuff, they want to get rid of it. In the meantime, that spin-off has seen an increase of its value by by the factor 8, so that the share price has exploded. And isn't that, I mean, we are talking as if the road to a sustainable world is set in stone. But when you look at those developments, you get the impression that, if I may be a bit provocative, King Coal might be back.
Thank you for that question on the interest rates. You're very correct, because in the Central African zone where I supervise, we share the same central bank. And at the start of COVID, we had measures from the regulator and the central bank to try to reduce the rates, actually, just to be able to support the economies and the businesses in that sector, which was good. They also pumped in money. They increased the liquidity for banks who needed the liquidity to be able to sustain the businesses that they were supporting. But quickly, as you said, in 2022, the central bank increased the normal lending rate by 25 basis points. And obviously, we have to transfer this to our clients. But what we tried to do was to separate the transfer that we're doing to make sure that companies that already had rates that were running for some time, we found another method to be able to keep the rate stable, but maybe transfer that into the commissions that had to be paid, just not to destabilize them, because they were also under a lot of pressure. The second thing that helped us was the cost of funds. The cost of funds in our area is very low. It's below 3%. So access to money, because we have very much liquidity in our area, we were able to also to be able to hedge that interest rate high was to invest more in securities, because we had higher returns from the security, and try to stem down or slow down or maintain the portfolio at the level where it was. And with the securities that we as primary dealers were getting from the government, we're able to animate the secondary market by encouraging our depositors to also purchase this securities, so that we could increase our spread on that side, although the interest rate was increasing on the other side. So that's the measures that we have been able to use to manage or mitigate the impact of the high interest rates that we are seeing coming out in 2022. And I believe that with the retake or the restart of the economy that we are also seeing is helping us to increase the volume of transactions that we are doing, compared to 2 years back, where we almost had a standstill. Nothing was happening. Nobody was using facilities. Nobody was doing capex investments. Everybody was trying to just work on the working capital needs that they required. And we had huge deposits that we're sitting on and we're not able to activate. So with these interest rates, we're just being more creative to make sure that we can participate in the economic uptake that we're seeing.
Right, Mr. Thompson.
Thank you very much for your question. And is the development to net zero actually set in stone? It's not. We tend to think it is, and I believe also that we will reach it. Sometimes you are discouraged from this, and I think recent developments are not very good experiences in this regard. Also, you mentioned one example. Also, the very high profits of oil and gas companies in these years is somewhat how do it sit together with our overall policy ambitions and also coal. I do believe, though, that the long-term trend goes this way. I think so many countries in the world have committed, and actually not from sort of a moral perspective, but more from also a self-interest, to have committed to climate change, or to combat climate change and reduce carbon emissions, that you have kind of reached a point of not going back. I can speak for the EU. I think the convictions are strong here, but also I think we were many that were very positively surprised by India's announcement at the latest at the COP26 in Glasgow. The US has engaged more in these questions, and even China has set some goals, and many other countries, important countries. So I maybe I'm too optimistic, but I do believe that the long-term trend is actually in this direction. Thank you.
Thank you. We have a question from the gentleman and then the lady.
Hello. So my name is Rami. I'm from Algeria, and I'm the founder of a startup that works in circular economy. Basically, what we have experienced since 2018 was that there is a lot of talk about green finance, whether it's from impact investment funds, VCs, or even local governments. The thing is that the focus goes more into energy transition than into what I believe to be an equally important problem, which is the dilapidation of natural resources and also the pollution of consumer goods in the world. So my question is, who in the whole ecosystem of climate work should a startup like us trying to make the change reach out to? Not individuals, but I mean, what are the profiles? Because we have tried corporates for CSR, we did governmental institutions, we went through the whole, and there doesn't seem to be much opportunity out there for startups. When, on the other hand, we see a lot of projects that are implemented by more established institutions that, based on my own opinion, sometimes lack the creativity needed for it to work, get access to these funds, but yet not the startups. Thank you.
Okay, thank you. Ma'am?
Hi, my name's Sonia. I'm from the Perth US Asia Centre in Australia. Right now we have an election campaign happening and both major parties are putting forward their climate policies. At the end of last year, Australia was ranked close to last, 58th, by COP26. At the same time, in the context of this conversation, Australia is home to the fourth largest pension fund capital reserves in the world. My question to the panel is, what do you say to the two parties in Australia vying for government? What should be in their climate policies? And how can government strategically encourage climate financing and make use of Australia's unique capital reserves?
Thank you. Would anyone like to answer the gentleman's question on adaptation, finance, circular economy, where the opportunities are?
There was a question on startups, and actually startups should be supported, not supported, but they should be encouraged through funds of funds. That's the right approach. That is, startups should be appraised by venture capitalists, and fund of funds should support venture funds. Eventually, startups should be viable. They should not look for grants. It's like business. They should be disruptionist in nature, and fund of fund should chip into the venture fund because the due diligence would have been done by venture capitalists. And that's how the startup movement has grown and expanded in India. It grew and expanded on the back of fund of funds in Israel. And the fund of funds should earmark about to my mind, about 33% of its funds for startups which are getting into green area of growth, circular economy, and for digital economy. These are areas of growth. And if you are able to disrupt these areas of growth, the startups will actually make a huge breakthroughs in the years to come, and therefore the fund of funds should be created by the federal governments and the state governments in the concerned countries.
Thank you. Mr. Thompson?
Thank you. I agree very much with Mr. Camden in that the fund of funds is sort of the answer to this question on this startup. And my point would also be that if it has a good effect on climate, it does not compete with the energy transition or not. If we look into the green taxonomy in the EU, which we sort of align our projects to or seek alignment with, it also defines environmental projects within these targets for our climate finance. So the one doesn't crowd out the other. On the question from Australia, maybe just very shortly on what is happening in the EU, it could maybe provide some kind of inspiration that there's a legal requirement coming up for companies and banks to disclose their climate contributions and what they do, which is not very climate contributive. There's a whole lot of regulation about that, but it will encourage companies to actually publish more data about what they are doing and enabling media, NGOs, politicians, others to engage in direct conversations with the companies on their contributions here, and I think that will have a huge effect in Europe. I don't know whether it would be possible in Australia also. Thank you.
Thank you. Mr. Kim, you wanted to come in?
Yes. I think I could contribute on the Australia question because I understand that Australia and Korea have a very strong energy relationship, I believe. I believe one of Australia's biggest national clients is our steel company, POSCO, which I understand has business in India as well. For the national, I think I'm seeing very different signals from the federal government level at Australia and the state level, very progressive state level climate policies, energy sector policies, whereas the federal level hasn't been it has been sending out inconsistent messages. I would say, and another thing is that I would say, as an export market for especially your thermal coal or metallurgical coal, the space in East Asia is reducing. I think that's the most important point that I must mention, and therefore the mining industry will have a lot more export room to countries in East Asia because of the climate policies emerging in these countries, which I just mentioned, the sentiment of coal changing, our steel industry changing, basically responding to customer demand for green steel. So I guess that's the key takeaway for Australia, that just as much as the export countries are changing, the economy of Australia should change, and therefore that should be reflected in the climate commitments from, climate policies that the new government should consider.
That this panel is walking away from wanting to get involved in the politics of climate finance and much more to the sense of what this conference is suggesting that we do as impassioned, impatient, and imperiled people, which is that the priorities of climate change need to be looked at the highest level when we think about the financing architecture, whether that's the G7, whether that's a host of other multilateral avenues. Standards seem to be an opportunity that the bankers and the people on the ground, as well as the regulators and the policy advisors, are seeing as an encouraging move. And so really it is about moving forward in taking the conversation of bankable projects and blended finance away from the politicians who are trying to make it about the definitions of greenwashing and of climate finance in itself. With that, I'd like to thank all of my panelists for their time and their expertise and being very patient with us. And thank you to the audience.